Hey everyone, as we all know, the tax season is approaching and the IRS is not going to give us any breaks. So I felt that since I looked into this a lot, I'm going to make a tutorial about how to deal with crypto taxes. So I feel like the most important thing to start with is talking about cost basis. And the things that we're going to be focusing on today are what is cost basis, why is it important, and how to calculate it. This is all going to be talked about today through this new channel that I'm making, which I'm going to call the Crypto Doc. And, like everyone else on YouTube, this is not financial advice. I am not a financial advisor or a tax preparer, and this content is for educational and entertainment purposes only. So what is cost basis? And I thought about a simple way on defining it. And I think that the best way to define it in a very simple fashion is it's basically how much money you spend to own, maintain, and dispose of an asset. So, it's always better to give examples about what actually is cost basis. And I'm going to keep this simple since it's the first video before I start talking about more complicated examples, especially in how it relates to crypto buying, selling, trading, transferring, staking, liquidity providing, bonding, and so forth. So, the first portion of what we defined cost basis was how much money you spend to own the cryptocurrency. So, for example, if I bought one BTC for $50,000 and I had to pay a 0.1% fee on an exchange for this purchase, the cost basis for the purchase is the amount of money I used to purchase the cryptocurrency plus the fee that I also used to purchase the cryptocurrency. So the cost basis would be $50,050. Now, for the sake of this example, the cost basis that relates to maintaining the asset, basically, in this example, we're not going to be doing anything with the asset other than holding it. But when I say maintain, I mean anything that you do with the cryptocurrency other than selling it. So we'll talk about this in another video in the future. Now, the last part is disposing of the cryptocurrency or the asset. And in most cases, when we say dispose, we mean we're selling the cryptocurrency. So let's say I sold that BTC that I purchased for 50,000 after it became 55,000. And of course, like most exchanges, you pay the same fee when you sell the cryptocurrency. And in the case of this situation, 0.1% of 55,000 is $55. So now, why do we bother ourselves with cost basis? Like, why do we care about it? It's because the value of cost basis lets you know how much money you gained or lost once you disposed of the asset. And based on that, you'll know how much taxes you have to pay. So now the last topic is how do we calculate the cost basis? And, based on the cost basis, how do we calculate how much we gained or lost? So back to our example, you bought one BTC for 50,000 and you paid a fee of $50. So the cost basis is $50,050. Then you sold that BTC at a price of 55,000 and you paid $55 for a fee. And it's the same BTC that you bought. And we'll talk about why this is important in a future video. So the cost basis that relates to owning the cryptocurrency or the BTC is $50,050. The cost basis to maintain or do stuff with the BTC other than selling is $0 in the case of our example. And the cost basis to dispose or specifically to sell the BTC was $55. So the total cost basis is $50,105. So now what do we do with this number that we calculated? Well, we want to calculate how much our capital gain or loss is, and therefore how much is taxable income in our case. So the US dollar value of the disposed asset subtracted by the cost basis that we calculated. We mash all the numbers together. So 55,000, which is how much we sold the BTC that we purchased, minus $50,105, which is the summation of the cost basis to own the cryptocurrency and the cost basis to dispose of the cryptocurrency. And that leaves us with a capital gain of $4,895. And how much tax you pay on that depends on if this is a short-term capital gain versus a long-term capital gain, and also depends on your adjusted gross income for the year in which you sold that cryptocurrency. So in the next video, we're going to talk about different scenarios that affect the cost basis, more or less the maintaining part, because what's special about cryptocurrency is that it's different than stocks. Stocks, they just sit in the exchange, you buy and you sell, you're not moving them around, you're not flipping them, you're not using the stocks to get APYs or use them as a form of liquidity providing or staking or yielding or anything of that such. But cryptocurrency, you're doing more with it. So, I hope you like this content. This is going to be my first video. So please like, subscribe, and click on the bell icon to receive notifications. And until we meet again with the next video, this is the Crypto Doc signing off.